Welcome to the PropTech Podcast. It's Kylie Davis here, and I'm delighted to be your host as we explore the brave new world where technology and real estate collide. I passionately believe we need to create and grow a sense of community between the innovators and the real estate agents and property owners, and sharing our stories is a really great way to do that. The aim of each episode is to introduce listeners to a PropTech innovator who is pushing the boundaries of what's possible, and to explore the issues and challenges raised by the tech and how they can create amazing property experiences. My guests in this episode are Spanos and Mike Thanos from IDS, a company that specialises in conducting high calibre automated property valuations at scale for government agencies with technology that is likely to impact how our cities are planned. Now, Chris and I used to work together at CoreLogic. In fact, we sat next to each other for over a year as co-workers on the solutions team, so we love a chat. But we kept it together in this episode with minimal in-jokes. Chris is a general counsel and executive director at IDS and is a finance and valuation industry specialist with a double degree in law, economics and econometrics. While Mike is a founder and director at IDS with an extensive career as an entrepreneur in the lending industry, and this includes involvement with LIXI, which promotes data standards for lending, and LTI, a mortgage documentation, e-signing and workflow business. With residential property ownership being one of the most valuable assets in the Australian economy, it's absolutely critical for governments at all levels to have accurate insights into property valuation. Chris Spanos and Mike Thanos, welcome to the PropTech Podcast.
Kylie, thank you.
It's great to have you here. So, look, I can't wait. You know me, I'm a bit of a data geek, and I can't wait to talk about data and property valuations with you. So before we kick off, though, we always ask, what is the IDS elevator pitch? So who's answering that?
I'll take that. Our short and
sweet
yes. Pitch is our focus is on the future of property valuations in Australia. Mm-hmm. We understand how they are currently used in the market, and we want to drive how they'll be used in the future.
Awesome. Okay. Now, what does IDS stand for? Because there's a lot of IDS businesses out there if you Google them. So I want to make sure people can find the right one.
It originally stood for Insight Data Solutions, but that's kind of a not particularly specific to property. It's just a generic. So everyone just knows us as IDS. And if you want to find us online, it's just ids.io is the easiest way to find us online.
Awesome. Okay. So what's the problem that we're solving? What's wrong with property valuations and how they've always been done?
Historically, there's a number of issues, but mainly time and accuracy across the board. Mm-hmm. So, a physical valuer would need access to a property, etc. So what the problem we tried to solve is automated valuation models already sort of started tackling that problem. So we're looking at what we would call next generation market leading AVMs. There's always a better way to build the widget. Mm-hmm. And also at the same time, when you look at statutory valuations, what the government is trying to do is, for land tax purposes, for council rates purposes, is what's known as mass appraisals. So they're not obviously physically visiting every property in Australia. You just couldn't possibly do that. So they have what are known as mass appraisal, computer-assisted mass appraisal platforms.
Yep. So
we've developed a suite of AVMs and market analytics, and we also have acquired what was the leading computer-assisted mass appraisal platform, also known as a CAMA from Thomson Reuters, and that's been our two primary focuses. So they're the solutions we're working on. How do we improve valuations for the corporate sector or finance industry, and how do we improve statutory valuations?
Okay. So there's a lot of misunderstanding, though, about a valuation, though. It's like, why do I need different sorts of valuations? Isn't my valuation my valuation? What's wrong with the way that apart from the physical side of it, auto valuations, what are some of the problems that have existed with them to date, and how are you fixing them?
So, Carly, in terms of the reasons that there's no one valuation fits all use cases, the best way to think about that is to think about the party, the organisation who's using that valuation, So probably the thing that most people would understand the best would be when they want to go to an auction or make an offer on a property. They're looking there to make sure that they don't overpay, but they also want to make sure that they're going armed with enough financial firepower to win if they really want that property. So in that case, they're very interested in the market value of the property before it sells. A bank, on the other hand, is very interested to understand that if that loan ever gets into trouble and they need to enforce their security against it, that they're going to have sufficient headroom that they're going to be able to get the money they've lent plus any interest or fees they've owed back by selling the property. So that's more a risk management sort of view. And then for the government, for example, doing mass appraisals, they're not just valuing an individual property, they're valuing every property in the jurisdiction. And their driver is one much more or much less about getting exactly the right answer for every individual property, but more making sure that all of the valuations looked relative to each other, are fair and equitable. So that when you have a conversation with your neighbour over the fence about your latest rates notice, you're not both getting a shock about the relative values of your properties, because the reality is you probably both have a pretty good idea of what your own property is worth. Right. So the use case very much drives the methodologies that are used, and also the what it costs to do these valuations, because some need to be very, very fast and almost real time. But others, it's okay to wait longer and to spend more time on them, because the problem or the risk of getting them wrong is the loss that somebody would incur or the cost they would incur is very much higher.
So this whole use case, and I guess it's also risk profile too, isn't it? So you could get a different, if you asked St. George Bank to get for valuation of your property from St. George, and then you also asked NAB or ANZ, that's very probable they would come back with something different based on their risk profile. Is that correct?
To some degree, I think that when you think about the sorts of products and information that we and others like us serve, you're right. In addition to the value itself, which we wouldn't give a different value for a different lender, but they may be more interested in different information about the property.
Got it.
That means that they're kind of black and white. Will we lend against this property type or a property with these risks? Full stop.
Yeah.
That's typically where the differences come.
But when a property buyer or seller is sort of going onto an online website and looking for their property valuation, that's kind of the vibe. It's not necessarily the constitution, right?
Yeah, well, I mean, the thing is that, and this is, I think, one of the real challenges that analytics and automated valuations have suffered from, is that because in competing for the eyeballs of the customer, everybody has started giving them away. I think that's undermined their value in the eyes of the consumer. So, people tend to think free stuff is not worth very much. What's interesting is that there's a lot of effort and a lot of data and a lot of investment goes into producing those numbers. And they are models. So the fact that we've all got an anecdotal example of where one of those estimates was clearly wrong, even though it said that the confidence of the model was very, very low. I mean, that's completely expected from the point of view of the way those models work, and lenders use them like that. So if the confidence isn't sufficiently high, and there's a garbage truck backing up in the background, if the confidence isn't sufficiently high, the lender won't rely on it, and they will get another form of valuation done.
Right. Okay. So AVM came in with a low confidence. We're going to send someone out to go and do it properly and take in some of those vagaries.
Exactly, or get a valuer to look at it from their desktop, which is that kind of mid model that's in the market.
Okay.
Looping back to what you said before, that's not always the case either, right? If you have what Mike was talking about before, because of the risks and risk rules that every lender has, it may be if you have the right deposit, so your LVR is low and they have a pre-existing relationship with you, they will have a higher tolerance for an AVM that has a large error rate, what we call an FSD in the industry, versus, and they'll say, okay, it's close enough within the ballpark that it's all a giant black box as far as the mortgage applicant is concerned. But there is often a very complicated system of rules.
Yeah. So, random question. With the rural property market, I mean, rural properties are often more problematic, aren't they? Or properties in country areas where the data isn't, there's not as much data as there is in, most suburbs in the city. Is the rural property boom making it a bit easier to get higher confidence around?
That's a good question. I mean, what we did see through COVID was that because volumes held up out in rural areas, even in Victoria, and I think balanced also by the fact that there was just an increase in activity in those markets as people fled to the CBD and brought forward the tree change or the sea change.
Yeah,
it was interesting. Yeah, we saw, and the way we measure this is how confident does the model still think it is overall.
Yep.
And we really only saw the model claiming or reporting itself to be less confident, typically in metro areas. So
Right.
You're right. It was that is what we observed for sure.
Yeah. Okay. So how big is the issue of property data and valuations in Australia and globally? Like, how big is this as a market? How much of it do we need?
I mean, it's a huge industry. So I mean, we all know that real estate is the biggest asset class in Australia, and so you would fully expect that therefore the products and services and the money spent on understanding the value and the risks associated with that asset class are in the hundreds and hundreds of millions of dollars. And I mean, a good example too, as Chris mentioned, we now provide technology platforms, information to government. So in Victoria alone, last year, $2.5 trillion worth of property was valued on our platform.
Wow.
So every property in the state of Victoria and 3 values for each of those properties. So in effect, it was approaching, 10 million estimates were produced on the platform. And the government spends, tens of millions of dollars per annum on doing that. And the reason they do that is that it underpins at the moment nearly $10 billion of state revenue, which is 20% of state revenue. So wow. That's council rates and land tax in particular. And for example, if New South Wales is successful in the initiative that's been put forward to replace transaction stamp duty with a broader based property tax, that 20% in New South Wales will become 40% of state government revenue. So, it's only growing in importance. And as the size of people's loans is growing overall, and in an environment with very low interest rates, again, for the banks to get the value of the properties they're lending against right, means that, spend and budgets and the volume of transactions and the volume of data that's being ingested is increasing year on year.
Yeah, fantastic. And
if you look globally as an example, Zillow alone last year during the pandemic's market cap has gone from 10 billion to 20 billion. If I chuck in Black Knight and CoreLogic US and First America, you're talking about something like 35 to 40 billion in market cap. And that's for companies that are doing a relatively small amount of property data and analytics. They've got nothing like complete coverage of the US alone. If we're talking about globally, what is property data and analytics worth? It's just, if one company could do it all, it would be an Apple or a Google or an Amazon. You're talking about a very, very large total addressable market.
And now let's hear a word from our sponsors. For almost 16 years, Direct Connect has made moving easy for over 1.2 million renters and homeowners by arranging connections to a wide range of services, from electricity and gas to internet and pay TV. With a national team of local account managers who are experts in the industry, Direct Connect are there to support your real estate business with competitive rewards for every successful connection, plus an industry-leading rewards program. The connection process is simple, and Direct Connect's always-on guarantee ensures your customers will be connected on the day they move in. Direct Connect offers a range of market-leading suppliers, and Direct Connect has now made it even easier than ever to send connections directly integrating with MRI Software's Property Tree. So in just a few clicks while processing a tenancy, you can send the connection details through and get your customers connected. To make the right connection and find out how Direct Connect can make moving easy for you and easy for your customers, visit agents.directconnect.com.au or call 1300 558 169. So how did IDS happen? What? Tell me the background of the company. Who came up with the idea and how did you guys come together?
Yeah, so my co-founder Louis Saroulis and I founded the business in 2013. Mm-hmm. Louis and I had known each other for at least a decade before that because we'd both worked around, in particular, the mortgage finance industry. Louis with his own business, which he sold to CoreLogic in the 2000s, and me with my own business, which wasn't in the valuation and property data space, but in mortgage processing and technology and documentation. So, we said to each other as we'd known each other and sort of become colleagues that it'd be good to work together one day. So, 2013 gave us both that opportunity. And so we founded IDS really based on the idea that, firstly, there was a reduced amount of choice in the market for those sorts of solutions. And we saw and heard from banks in particular and clients that there was an appetite for a challenger. And I guess also, when we think about the journey into the government space, we'd seen for some time, it felt to us like the way that government did valuations in 2015 was very much the way that banks did them in 2000.
You're saying government was behind the...
We did, yeah. So we could really see that the way that would play out would probably be the same way it had played out with the emergence of the platforms like Valex, the emergence of AVMs, the broader use of data and analytics. So I guess what we're hoping we're doing is bringing our experience in doing that in the corporate space to the government space as governments need to do this more efficiently and more effectively. And the reality is there's an aging population of municipal valuers out there who are going to all be retiring in the next 10 years. Yep. And the industry is not, it's not particularly sexy or interesting for young people coming into the industry if it doesn't get into that space of data and analytics and modern technology. So we're hoping to be part of I guess, that modernization process.
I guess too, if governments have a better idea of the valuation of every property, some of the stuff that we've seen over the last 5 to 10 years where infrastructure's gone into and valuations around, how much is it actually going to cost us to put in that freeway, road, train station, underground tunnel that's going to require X number of properties to come out of that, for us to purchase. It gives you more accuracy around predicting some of that costing as well, doesn't it?
Well, it does, and it also gives government the ability to do value uplift capture to help to fund, the investment that governments have to make in that sort of infrastructure. So, absolutely. And that's really all based on a good understanding of the properties and the land uses that are around those corridors, for example, when a freeway or a rail line may be put through. But then, yes, being able to model what would the impact in different scenarios be on making it easier for people to live there, because there are services and they can suddenly, it's a place people can realistically live and work.
Awesome.
And if you look at the way VM Online works, as Mike referenced earlier, they're really doing 3 estimates per property, right? They're doing land valuation, improved valuation, and rental assessment valuation. So the council may, depending on your council rates or depending on your land tax, that may be levied on an unimproved value, but the improved value is still in the system. There's a whole bunch of data that's still in the system. So governments, once they've got access to this data, there's all sorts of modelling they can do based on that.
Awesome. Okay. So how does IDS work? What's your business model? You've obviously got a very lucrative contract with the Victorian state government. What's the...
So we're fundamentally a SaaS business.
Yep.
And in the corporate space our customers consume our services via our APIs. In the government space, we have a true platform. So we have, 600 plus users logging onto the platform every day in Victoria and South Australia. but we also serve APIs which integrate with other government departments, and we integrate to all of the council systems as well. So we really are embedded within the ecosystem, the government property ecosystem in the jurisdictions that we serve. Mm-hmm. We haven't gone down the path of building a consumer portal, for example, because our view is that market is, very, very well served. What we do is that we power people who have their own consumers as customers, and we help them to deliver property-based experiences to their customers and into the workflows where they're servicing their own customers. So whether that's a bank or a mortgage broker or a financial advisor, we sit quietly in the background, crunching the numbers and serving the information that helps people to create their own customer experiences.
Awesome. Okay. So what's the Australian, now you touched on it a little bit before, and, in the interest of full disclosure, Chris and I used to work together when we were at CoreLogic. So we were part of that period when a lot of this valuation stuff was amalgamating into like a bigger company. But what's the property data universe like at the moment? Because you do have CoreLogic, which is the very big active one, and you guys referred to yourselves as a challenger. Why do we need more challengers?
It's probably a couple of reasons. So I think while CoreLogic is the biggest obvious property data and analytics provider, for many Australian consumers, they actually think of realestate.com.au, REA Group and Domain being their two biggest data providers, because people people sit on the weekend just going through their listings. REA, we know, has acquired HomeTrack, and they're building their own CMA solution, so they'll have something to bring to market as a competitor to RP Professional, and obviously Domain has Pricefinder. So you're seeing a lot of activity in that space, and what we're seeing a lot of activity is there's a lot of startups. JLL has entered the AVM space. Realaz, which was acquired. Velocity is a competitor to CoreLogic's Valix platform.
Are they a competitor to you as well?
Not directly, because they're looking at workflow management for finance valuations, which is something we don't do at the moment. Point Data has come out of South Australia. There's another group called Value Australia. There's lots of startups, and I think really what's driving that is everyone can see that there's an insatiable demand. And the thing that drives all of this at the end of the day is you want to remove what's known as asymmetric information. So a really good, to go off on a very brief tangent, what we saw with GameStop, right, in the US stock market last week, where a stock went from $20 to $450 in a week. And that's because a group of people on Reddit started buying shares and pumping it up, right? And that's a classic example where a small group of market participants know something about the market that no one else knows, and then everyone piles in.
Mm-hmm. A little bit like you and your Apple shares, right?
Yeah, a little bit like that.
It's an in-joke.
It's definitely an in-joke. So and same goes with property, right? The example we gave with auctions, you really want, when someone goes to an auction, you don't want asymmetric information. You want symmetric information. You want buyers and sellers to know everything they can about the property, so it's a competitive marketplace. So what you're seeing is lots and lots of entrants, and what I would expect long term is there'll definitely be consolidation. You just can't have that many small startups. I think the fintech space is very interesting and very competitive, but you will also see some consolidation, and we're already seeing some of that. So Realaz was a startup, and I think
it bought by ANZ or something, didn't they?
It was ANZ, wasn't it, that acquired them? And I think you'll see more of that along the line.
Yeah. I mean, we see this, don't we? Like, there'll be a fluster of amalgamations, and then while everyone kind of comes under one bigger umbrellas, and then sort of a couple of years later, there's another flurry of startups pop up. While 1 minute it's good to amalgamate, the next minute it's good to be independent. So we talked a little bit about property. We talked a little bit about COVID before. What the volume of sales going through the system always impacts it. And you mentioned before about rural properties, like seeing a lot more rural data coming through. But how how did that COVID period affect valuations, and what is it going to mean as we come out of it? Anything?
Yeah, for sure. I mean, I think everybody has been well, not everybody, but many people have been surprised by the resilience of the market. And so, I think at the bottom, we all still need a roof over our heads. And perhaps, if anything, living through COVID, and depending on where you were, but certainly as a Victorian, it's made you only more value having a roof over your head and value that environment. So with super low interest rates as well, and you combine that with the fact that there's still tremendous demand for property. So there are some challenged classes though, and there's no doubt that units and apartments in the major capital cities are challenged, and we've seen developers go into receivership and get into problem as well. So it's not a one size fits all situation. And I think, there's still probably the economic fallout is yet to play out because government support hasn't been fully withdrawn in the form of JobKeeper, et cetera. And there's no doubt, there are businesses and therefore employees and business owners who are going to, that are economically challenged by this, which translates into mortgage arrears and things like that. But I think, we're very fortunate that the government has spent big and provided support. And fundamentally, the property market is still pretty sound and still a pretty good bet. So there'll be adjustment and there'll be challenges, but everything we have seen in the way our indices and our models have performed has borne that story out.
Yeah, okay. So we're not going to get a year into the future and go, we need to be careful of that data because that was that period when everyone, was in lockdown. It's kind of sorting itself out. It
does, and I think though we had to be very careful in monitoring the way that the models were responding to the data, and in some key areas the paucity of the data.
Yeah.
And we actually had customers very interested in understanding and getting us to explain that to them. So to get a little bit technical, for example, and I talked earlier about, or Chris mentioned FSDs. I mean, we saw properties migrating into higher FSD bands, which effectively means that the confidence of the model for that property in that area is now lower. So as a result, when you look at an entire, portfolio of properties or portfolio of valuations, on the whole, the models were less confident about the value of those properties. And that's appropriate because they're supposed to respond and they're supposed to be transparent about their confidence, because that's a key thing for people who are using those estimates to understand. We're now seeing, though, that those properties are migrating back more towards the long-term norm, which is the band in which they would typically live. Again, based on the attributes of the property, the homogeneity of that property stock, and the amount of market activity that goes on there. So I think it's a good test for a model how it responds to those periods of time. And certainly we've monitored ours very closely and been quietly pleased about the way they've performed through that period of time.
Cool. So just to confirm, what does FSD stand for, just for those who don't know that acronym?
So that stands for the forecast standard deviation. Perfect, which is effectively it's a statistical term, the estimate of the error of the model or that particular estimate.
Yes. So, and I remember when we were at CoreLogic, we used to say there's no such thing as, you often get told, the data's wrong, but there's not like the data's wrong. It's that it's, there's no such thing as right or wrong data. There's data that you understand the suppositions that are sitting behind the model, right? And the better you understand that and the more clearer they are, the more accurate the data is likely to be.
Yeah, absolutely. And I think, this is certainly one of the things we've learned through our journey is that explaining the way these models work to our customers and then helping them to explain the way the models work to their customers is really, really important. And you actually have to invest quite a bit of time in that. And in the process, it forces you to be very, very clear about what you're doing. And to understand that there's, depending again on the use case, there's a level of you've got to pitch the level of complexity, I guess, and sophistication at the right level. Otherwise, people just switch off, or maybe even worse, they don't quite understand correctly and they use things the wrong way.
And then I think just to double up on that point, just to be explicitly clear, often we are talking to people within lenders, right? This is finance professionals in the banks.
Yeah.
And you need to explain it to them and really get them to grok exactly what it is they should be doing with your indices, with your analytics, with your AVMs, and what it isn't. So if you already have that issue within what you would consider a sophisticated consumer of data and analytics, it's no surprise that when a consumer sees an AVM on a website like the REA or the domain website, and they're like, this is completely wrong, your model is garbage. Well, you wouldn't expect them to understand better, right? It's so difficult to explain exactly what's going on. And I guess real estate agents and mortgage brokers as the two sort of frontline workers that have interactions with consumers play an important part of that education process.
Well, an AVM is very different to the market price.
Exactly.
And many agents would benefit from understanding that a little bit more clearly as well. As a real estate agent, you know you need to be doing more content marketing. But creating posts for social media, creating videos and reports is hard work, lots of hard work, and it takes time. So that's why you need HomePrezo. If you're a typical agent posting 1 or 2 social media posts a week, HomePrezo can save you between 75 to 100 hours a year. How many more properties could you sell if you had that time back? HomePrezo can help you create engaging, informative videos about how the property market in your local suburb is performing. Plus, it makes creating suburb reports, rental videos for landlords, and social media infographics an absolute piece of cake. If you can type in a suburb or type an address, you can create a Prezo using HomePrezo in just a few minutes. Listeners to the PropTech podcast receive a 14-day free trial. Now that's twice as long as the normal free trial. So go to homeprezo.com.au and click the sign up button and use the code PropTech to get your extended free trial. Or click the link in our show notes. So guys, what stage are you at the moment? How big are you? What's your size?
So we've got 20 full-time staff.
Mm-hmm.
We're based in Sydney and in Melbourne.
Mm-hmm.
We've got some pretty ambitious growth plans which are tied to some large government opportunities that we're working on at the moment.
Mm-hmm.
And to support that, because we're continuing to invest ahead of our effectively ahead of our revenue, we are at the moment about to launch a cap raise that we're hoping to close up this quarter.
Mm-hmm.
So that will help us to increase the team significantly.
Mm-hmm.
Our biggest cost is people. So getting excellent people on the team. One of the things that's different about the government space to our sort of banking finance space is that those are very large long-term contracts, and they involve very long and complicated transition periods, because you're effectively putting a new operating platform into a valuer general's office.
Yeah.
Lots of system integration and configuration to suit and deliver on the jurisdictional requirements, the
Mm-hmm.
statutory methodologies and things. So that takes quite a strong project implementation delivery capability. So we're going to be investing quite a bit in that, as well as continuing to invest in software engineers, data analysts, data engineers, and data scientists, so that we stay ahead of the game and use the latest technologies and techniques when it comes to the analytics side of things.
Cool. Are you able to say how much you're hoping to raise?
It's millions of dollars. Millions of dollars for a kind of interesting but minority stake in the business.
All right. Okay. Well, we'll include some details in the show notes if anyone is interested, that they can reach out to you. Cool. So how should real estate agents or developers be using what you guys do? Are they able to, or is it because you're SaaS-based and B2B?
At the moment, the primary way they would do that is through some of our partners, like Home Loans uses our data as part of their loan score product. We're also working with fintechs like Australian Mortgage Marketplace, so you're applying for a mortgage for a mortgage through AMM, it'll be our AVM that you'll be consuming. So because we've stayed out of the consumer market because it's so well serviced at the moment, it's primarily through touch points with our APIs.
Right.
So real estate agents directly and property developers, depending on how our rollout goes with our APIs, if you see a little IDS layer. So a good example would be at the start of last year, St. George released an iPhone property app. So we're all over that. But that ended up being a 1-year pilot. And it was off the back of us being a graduate of Westpac's Fueled Accelerator, data accelerator program. So we've built lots of relationships with Westpac, but a good example of that is they tried an iPhone app, they ran it in the marketplace for a year, and then they wrapped it up because they didn't get enough.
Too many of us are on Android, Chris.
Well, I was going to say I shouldn't speculate because maybe it didn't meet some internal metrics they had. Who knows why? But we're always willing to. The way a real estate agent would consume us is not directly; it would be through someone else.
Okay. What do you think the next 5 years holds actually for the property valuation space? So, I mean, you've got a little bit of a crystal ball if you know what's going to happen in government because you're seeing what's happening in sort of finance. But where do you see this going next? What are the big trends that are going to affect it?
So, in terms of the Australian landscape specifically, I think there's probably 3 trends we're seeing when it comes to property data and analytics that will directly impact the real estate industry and Australian consumers. The first of these is there will definitely be consolidation amongst the data providers, and there'll definitely be consolidation within the valuation firms. You've seen that trend continuing. The other thing that's interesting is looking at how every state and territory provides its data, which then affects how fintechs can use that data. So you can compare and contrast New South Wales, which has its open data initiative. So all of their property sales and data that comes from the Office of State Revenue and the Valuer General's Department is available for free, versus other states and territories that have privatized their land registries. And what you've seen in most of those states and territories is a significant increase in the cost of procuring that wholesale data.
Okay.
That may perversely end up having the consequence of consolidating, CoreLogic, REA, and Domain as being the primary providers of this data, which I think it's something for the Australian government to be aware of, what is best for the consumer long term. And then I think the last thing that will be interesting is how PEXA plays out, because I think a lot of people understand the role PEXA plays in the mortgage workflow. In the property settlement workflow, not mortgage workflow. But if you think about what's going on with PEXA often knows, and so a real estate agent meets somebody. One of the things they do is, they generate a CMA, but the other thing they're doing is they're opening up a workspace in PEXA as a potential transaction. So PEXA will have access to very unique data, and what they do with that data and how that plays out. They're the 3 trends we see. What I expect is the liberation of more data. And if you look at some of the things in the US, such as companies like House Canary and some of the stuff they're doing with imagery, you should see and machine learning applied to data, you should see a generational step in data and in analytics and computer models. But it's very hard to predict how all of that will play out given those 3 things occurring in Australia.
So I just want to drill down on something that you said there. So on one hand, we've got, automation and AI and image recognition and things like that, making it faster, quicker, cheaper, easier to pull data out of, previously non-data environments. But then on the other hand, we've got some government bodies basically charging an awful lot to access their aggregated data, which is pushing the price up and the access level down. Is that what you're saying?
Absolutely.
So the cost of data is very much in government hands in most states in Australia.
The cost of the core data set.
Core data, yep.
So because of Torrens title, and every single property sale gets registered at the state government level, and the state governments are the providers of that core sort of gold standard. This is the sale price and this is the sale date of a property, and everything else builds off that.
Mm-hmm. Awesome. So just like COVID, basically the states really are in control. So one last question, fellas. What's the future of IDS once you've got your raise coming up? What comes after that?
So
domination.
Well, I think we'd be happy. We'd be happy with Australian domination. No, look, I think we keep doing what we're doing. There are, there's a generation of aging technology out there within governments that we are hoping to play our part in helping to modernise. We already have just under 30% market share in the mass appraisal space, and our short-term ambition is to take that to closer to 50%. And then, we want to be a core part of the ecosystem in the government valuation space, as well as, we think that with our AVM technology and the data and analytics that we've developed for banks, that there's a long runway of opportunity there. I think probably the most interesting opportunity, and we'd love to see this play out somehow, is to maybe unlock some of the data that's locked up inside banks and the data that's locked up inside governments around, there's very rich property data sits in both places. And we think there are some opportunities there for either some exchange or some sharing to the benefit of the whole community. And we think we can play a role in being an enabler for that.
In a perfectly privacy compliant way, right?
Absolutely. And we see both sides of that equation. And there's no doubt that there are multiple dollars being spent by multiple organisations collecting and verifying and validating exactly the same information multiple times. So that seems to be pretty economically inefficient. And as you say, though, subject to making sure that proper governance and respect for privacy principles, etc., around that is protected. There are definitely opportunities to make this all work a lot more efficiently and a lot more accurately than it does today.
Fantastic. Well, Chris, have you got anything else to add?
I think Mike summed that up nicely, other than to say one of the dynamics we've seen in the past, and we saw that at CoreLogic, where you have 4 large banks and each one of them protects their data as a mother protects their cubs, right? They really think that it is unique and it is a competitive advantage. But if you can find a way for all 4 major banks and the 8 state governments and territory governments to share their data, there is the sum of all those parts will be dramatically greater than the whole, and it will be to the benefit of all Australian consumers. I mean, if we are interested in a competitive, transparent property marketplace, which we should be, that's the only way to achieve the end game.
Yeah, and when we say sharing data, we're not talking about necessarily the details of the individual people that are inside the properties. We're talking about sort of the individual properties then sort of building up to an aggregated data set, that the more data sets you've got, the broader and the richer and the deeper the information, which powers the models, right?
And the great thing about property data is it's the kind of thing that is, with the right address matching, et cetera, it is the kind of thing that you can aggregate in a way that doesn't require any personal information. You can do all of this in a way that's completely compliant and doesn't even need personal information for matching purposes. Yeah.
Fantastic. Well, look forward to seeing that, and best of luck, guys, with your next raise.
Thanks, Kylie.
Thanks so much for telling us about IDS. Thank you.
You're welcome. Thank you.
Thanks, Kylie.
So that was Chris and Mike from IDS, a PropTech specialising in large-scale property valuations for the government sector. The property valuation space has been fascinating over the past 10 years in Australia. It started with small specialist tech firms like IntelliVal, which was purchased by CoreLogic to become part of something much larger. But over the past few years, other businesses have split off to see more growth in independent and specialist valuation firms like IDS and across both the residential and commercial space. So we're seeing much more specialisation in this space. And of course, HomeTrack was purchased by realestate.com.au and is now PropTrack. So everyone's interested in valuations. But there's no one correct way to do a property valuation. It depends on the purpose that it's being used for and the data parameters that are being included. So it's great to see this diversity and extraordinary expertise coming back into the market. The property market becomes more transparent and accountable with every new iteration of the modelling. So well done, Chris, Mike and Louis and the team at IDS, and good luck with your fundraise. If you're interested in talking to the guys, I've included their details in the show notes. Now, if you have enjoyed this episode of the PropTech podcast, we would love you to tell your friends or drop me a line either via email, on LinkedIn or our Facebook page, which you can find on @KylieDavisPropTech. You can follow the podcast on Spotify, Google Podcasts, Apple iTunes and Anchor, and where all good podcasts are heard. And I'd really love it if you could subscribe or leave a review. I'd like to thank my audio support, Charlie Hollins and Sam Hollins, and the fabulous Jill Escudero, and our sponsors Direct Connect, Making Moving Easy, Smidge, official wines of the PropTech community, and Home Prezzo, now part of ActivePipe and making marketing automation easier than ever before. And if you are a PropTech, make sure you join the PropTech Association of Australia and join like-minded tech people who are passionate about the property industry and committed to improving experiences in how we buy, sell, rent, manage, build and finance property. Go to proptechassociation.com.au and make sure that you also enter the PropTech Awards, which have just been launched. So thanks everyone. Until next week, keep on PropTeching.